Okay, students. So shall we begin, students?
Yes,
Yes,
ma'am.
ma'am.
So see, this is next chapter. We have already done in audit of banking companies. Now this is next chapter, which is audit of insurance companies. Now, same way as we have done audit of banking companies, you remember I told you if somebody remembers FRA subject, so in that we have already done the final accounts of banking companies. So it was pretty easy for us to just a minute. Yeah. So it was pretty easy to understand that chapter because we have already done the practical aspect of that in FRA subject. So same way we have, we have been doing FRA subject final accounts of insurance companies also. In FRA subject, we have done final accounts of insurance companies also. So this chapter will also become very easy if you understand through final accounts of insurance. You remember we had the final accounts of insurance in FRA?
Yes.
Yes.
Yes,
Yes,
ma'am.
ma'am.
Same chapter, but in theoretical aspect as to how auditor has to audit uh, um, the insurance companies, the financial statement of insurance companies. So that is our chapter. So basically, what do you mean by insurance company? There are two parties, insurer and insured. The insurer undertakes in consideration in sum of money a good to make good the loss suffered by the insured. That means the company is taking risk of the insured, and in consideration, the insured has to pay premium for that. It is a policy document. It is a mutual agreement between the two parties, and that policy document becomes because of that policy document, it becomes a valid contract, and that is known as insurance contract. Okay. There are two types of insurance, as you know, life and general. Life covers life of a person, okay, and death covers many things like fire, accident, marine, etc. Okay. Any insurance company can be carried out in India, okay, but it should be public limited company, that means government owned company, cooperative society, or insurance cooperative society. Okay. It should be registered under IRDA Act 1999. Legal framework. What is legal framework? Legal framework matlab, what do you mean by that? That means there is some law that is made for insurance companies also. Like you have no RBI Act for banking companies, Banking Regulation Act 1949 for banking companies. Similarly, you have laws, made for insurance companies also, and that is known as IRDA Act 1999. So what is first IRDA Act 1999? Insurance Regulatory and Developmental Authority. IRDA, Insurance Regulatory and Development Authority. And it is known as IRDA Act 1999. In this, there are, rules, regulations, the principles that one has to follow, that insurance companies have to follow. Next is Companies Act 2013. Because we make final accounts of insurance companies, no? Therefore, final accounts are made according to Companies Act 2013. Because it is company, yes or no, whether insurance or corporate or banking, but all these are they belong to company only. It comes in the category of companies. Therefore, final accounts are made as per the act which is known as Companies Act 2013. Next is General Insurance Business Act 1972. It is only applicable for general insurance business. Okay. Next, important provisions of Laws Amendment Act 2015. Like when you make final accounts, how you make final accounts? If it is a life insurance company, then you will denote it with A. And if it is general insurance business, then you will refer it with B. So there are 3 to 4 accounts. Like revenue account, it will be known as ARA if it is life insurance company. P&L account, it will be referred to as APL, and balance sheet ABS. So A stands for life insurance company. Students, are you getting my point?
Yes, ma'am.
Yes.
This A stands for
Yes, ma'am.
life insurance company. Okay. Now there are 3 accounts that are made separately. One is RA, that is revenue account. One is P&L, that is profit and loss account. And another one is BS, that is balance sheet. But life insurance company ka. When it comes to general insurance business, we make BRA. B stands for general insurance, RA stands for revenue account. Again, BPL, that is B stands for general insurance business, PL stands for profit and loss account. Again, B stands for general insurance business and BS stands for, tell me,
Balance sheet.
balance sheet. Very good. So this is how you can refer. Okay. Next is, just a minute, let me rub off. Okay. Next is register of policies. See how many policies are issued and what is the name of a person, policyholder, address of policyholder. So this particular register contains the details about all the policies, the policyholders, and record of the company, that how many policies are issued in a year. Okay, next, register of claims. Register means the book that is, made for keeping records is known as register. So register of claims means, claim means to settle the money at the point where insured suffer losses. Suppose I had taken home insurance. So fire occurs. Okay, now I will go to company and I will claim the money. Claim the money means I will ask them to pay me the money that has been lost because of the fire. Okay, now company is going to pay me so and so amount, suppose 40,000 or 4 lakhs. So whatever amount that company is paying me becomes expenses for the company. So company has to keep a record of date, name, address, date of discharge of the claim. How did you, register the claim? So every detail you have to keep it in this register. Next, audit. Every company, every insurance business has to get its account audited. Why? Because it is compulsory according to Companies Act 2013. Approved investment. General insurance businesses will have to keep some portion of their funds into approved securities. That means government securities. Payment of commission to authorized agents. No, it should not be maximum 15%. If you have commission, if you have insurance agents, yes, every company has insurance agents, but then to them, the commission which is paid by the company, it should not be maximum, over and above 15%. It should be maximum 15%, not over and above that. Students, are you getting my point?
Yes, ma'am.
Okay. Now, some important amendments were made by Insurance Regulatory Authority, IRDA Act 1999. And what were their amendments? See, one by one. It is mandatory for insurance company to make balance sheet, separate P&L account, and a separate receipt and payment account, which is nothing but revenue account only. Next, it is compulsory. The accounts are to be prepared for every financial year. Okay, every financial year. Financial year starts from April to
Ma'am, March.
31st March.
From April to 31st March. Very good. Every insurer must keep separate accounts relating to funds of shareholder and policyholder. So suppose you have 10,000 policyholders and 20,000 shareholders. So their accounts must be separate. Do not, put everything in one box. It will be very, chaos. It will be very much confusion then. Okay, next. Insurers are prohibited from investing either directly or indirectly their funds outside India. See, insurers means companies, insurance companies. They are not allowed to invest their money outside India without the permission taken by central government and IRDA Act 1999. Okay, next. Amendment raises commission on fire and marine policies from previous 10 to 15%. That's what I told you earlier. Previously, commission was not more than 10%, but now the commission has been raised to 15%. Commission is given to whom?
Agent.
Agents.
Very good. Insurance agents. Very good. Next, insurers are required to keep a solvency margin. What do you mean by solvency margin? Suppose sometimes your assets are not more than your liabilities, then some losses may occur in your company. So during that period, you could recover the loss, no? You should be capable of recovering the losses. Therefore, you should have some money aside, some money kept aside so that you can save your company. Suppose if you take your own example, you have every month 2000 pocket money from your dad. But now, suppose a month comes wherein your friends' birthdays are coming, you have some parties to throw, and also you have Christmas or New Year. So your 2000 will be not enough for you. Now what will you do is from November or from October only, you will start saving some money for December month, because December month may you are going to have many expenses. So that is known as solvency margin. Solvency means suddenly or emergency funds can be required at some point of time in future. Therefore company has to keep some money ready, some money reserved for future sudden expenses, for future emergency, situations. Are you getting my point?
Yes, ma'am.
Okay. Next, every insurer must submit a prescribed return of maintenance of such margin to IRDA. Now, whatever solvency margin you keep, you have to submit it to IRDA. Okay. Next, every insurer company on general insurance business should create a catastrophe reserve. Catastrophe means same thing. Catastrophe means suppose you may need these type of funds or reserves in future when emergency occurs. Okay, so that's written to meet the future potential liabilities against insurance policies in force. Okay. These were some amendments that were brought in IRDA Act. Okay. No need to do the structure part. Just delete this part. Now registration. Just a minute, huh? Yeah. So registration part. Now registration is section number 3. In section number 3, it is spoken about registration of insurance companies. Those who are carrying on insurance business or want to carry insurance business, they have to they require a certificate of registration before the commencement of business from IRDA. That means registration has to be done from IRDA. Are you getting my point, students? Before commencement only, you need to have that certificate. Otherwise, you will not be able to start up insurance business. So what is the procedure? Just have a look on all the points. Insurer intending to obtain a certificate of registration should give a requisition for its registration to IRDA. Now, how will IRDA come to know about, how many companies will be coming in future? So you have to report to IRDA and tell them about and put a request about getting certificate to start up an insurance business. You have to tell them. Okay, next. Every application for registration shall be made in such a manner and shall be complied by such documents as may be specified by regulation. So second point is nothing but you all have to submit. I mean, those who want to open insurance business will have to submit proper documents. If there are shortage, documents nahi hai proper, then you will not be able to start up insurance business. Okay, IRDA, after conducting inquiries as it may be considered necessary for grant of certificate, may grant certificate of registration. So IRDA will give you certificate, but after conducting inquiries, they will ask you many questions. They will see which place are you opening the business, which place are you setting up your business, or which all areas you will be providing services of insurance. So these type of inquiry questions will be asked, and only then if IRDA is satisfied, then they will give you or grant certificate of registration. Separate application has to be made for each class. Suppose if you want to open both life and general, so both will have separate applications. So you need to submit separate application. Okay. Suppose if you want to open only general insurance, but in general you want to open fire also, marine also, accident, mediclaim. So you will have to give separate applications for each one of them. Okay. Next, if application is rejected by IRDA, then you will not be able to apply for at least 2 years. For at least how many years? 2 years
2
in
years.
different class of general insurance business. Suppose IRDA is rejecting your fire insurance. You will not be able to do it for 2 years. After 2 years, you again can apply for the same. Next, certificate granted to the insurer should be renewed annually. So suppose if you got insurance certificate now, registration certificate, you need to renew it every year. Getting my point?
Yes, ma'am.
Okay, so this was procedure. Suspension of the certificate. Now suppose if you do some illegal activity or you do not operate as per the laws, principles, rules, regulations stated in IRDA Act 1999, then your certificate will become null and void. So suspend. What do you mean by suspend? Students, what do you mean by suspend?
Ma'am, reject.
Yes, nice. Suspend means once the certificate is granted to you, afterwards they will keep noticing you whether you are following all the rules and regulations. If you will not follow, they will cancel the certificate. They will cancel the authorization which was given to you, the powers which were given to you. They will cancel the license, the certificate, and that is known as suspension. Suppose if you are coming to college and you are not following the rules and regulations, you are not attending lectures, you are misbehaving. So at certain point of time, we will warn you. But after that point, you will be suspended. That means your admission will be cancelled from the college and the university. Are you following me? So that cancellation of admission from college and university for say suppose 3 years. So that is known as suspension. Students, are you getting my point?
Yes, ma'am.
Yes, ma'am.
So suspension of certificate of registration means cancellation of certificate. IRDA has powers, nobody else, but IRDA has power to suspend a class or classes of general insurance business of an insurer for such period as may be prescribed. Such period may be 2 years, 3 years, or 1 year, or 1 month. Okay. Insurer ceases to operate from date of suspension. Now you cannot operate your business from the date of suspension or cancellation of the certificate. Ceases to operate means stop to operate. You cannot operate when you are suspended. Next, due opportunity of presenting his case should be given to the insurer before cancelling the certificate. That means suppose if I am cancelling your admission, so at least at least, you should be given a chance to speak out and give your valid, whatever you want to say. I should be giving you chance before canceling your admission. I should be giving you chance to speak out, okay, in your favor. Are you getting my point? Yes or no?
Yes, ma'am.
Yes, ma'am.
Similarly, companies also should be given chance to present their case before IRDA cancels their certificate. Okay, got my point? So this was
Yes, ma'am.
registration, then procedure, and we did suspension of the registration certificate. About license, it is section 42, which says that license should be issued by IRDA, otherwise you will not be able to operate the business. There should be proper license given to insurance agents. Now, suppose if you are an insurance agent, how will you be getting jobs? Because you are insurance agent now, how will you be getting your jobs? Based on the license that you possess. Requisite qualification and practical training is given, which is not, of course, at least for 12 months. But then after that qualification and training, a license is issued by IRDA. And because of that license, you get jobs in insurance companies. Not like that only, but after getting license. How will you get license? After requisite qualifications and practical training. Got my point, students?
Yes.
Yes, ma'am.
Special points in life insurance accounts. Let's see, one of them is reinsurance. I hope you understand what is reinsurance. When insurance company takes help of several other insurance companies to come together to issue on single risk. That means, suppose if a customer is asking for a big insurance policy, there is a big complex. So if there is a big complex and it costs rupees 4-5 crores, so the insurance is costing rupees 4-5 crores. So tell me, one single company will be able to afford 4-5 crores ka insurance of one customer? No. Therefore, that particular insurance company will go to other insurance company and will take help of them, so that the risk is divided among 2-3 insurance companies. Okay, so that is known as reinsurance. There are two concepts in reinsurance: ceded and accepted. Ceded means when you give your customer, when you share your customer with other insurance companies, okay, that time you get the commission. And when reinsurance accepted means when some other companies are giving you their customers to you, they are sharing their customers, they are sharing their business with you. So that time you have to pay the commission. Likha bhi aisi has to pay the commission for accepting reinsurance. Surrenders. What do you mean by surrender? Suppose if you are not able to pay premium on time now, and you do not have future, you do not have that capability of paying future premiums also, you may surrender the policy. Surrender the policy. And this happens only in life insurance policies. Okay. So whatever, suppose 40 years ka insurance tha, but you could pay only 20 years insurance premium. So rest of the 20 years, if you're not able to pay, just surrender the policy and you will be paid according to the number of years that your policy was running. 20 years. So instead of 40 years, company will pay you for 20 years only. Because for rest of the 20 years, you did not operate the policy. No. The policy was not active. Getting my point? Students, getting my point about surrenders?
Yes, ma'am.
Now, bonus to policyholders. What do you mean by bonus to policyholders? Suppose if this happens only again in life insurance companies. So the premium that that is charged by the company. Now, suppose your what to say, the life of the policy was 40 years. So after 40 years, at one time, you will be getting some bonus amount. Okay. And suppose in between only, after 10 years, say for example, 15 years, the bonus is, accumulated in your account. Every year bonus is accumulated in your account. Every year. But suppose after 15 years, you want bonus amount. Okay, now because you want to pay premium, but you do not have that money to pay premium. So you will ask company to pay bonus to you for 15 years. And with the help of that bonus, premiums will be adjusted. See, that is what is written here. Amount of bonus can be adjusted against premium. And that is known as bonus in reduction of premiums. Annuities. What are annuities? नाम से पता लग रहा है, annual. Annuities. These are annual pension plans which are given by life insurance companies. So usually it is a pension plan. Suppose if you are a private company's employee, when you will retire, nobody is going to give you salary and pension. And therefore, this annuity program was started. Annuity system was started by insurance company wherein after your retirement, you will start receiving pension from this annuity plans. Are you getting my point, students?
Yes, ma'am.
Yes? Okay.
Yes, ma'am.
Life insurance or assurance fund. This is only for life insurance companies, as the name suggests, life insurance fund. So this is the fund created for emergencies, for sudden, expenses that may arise in future. Okay. So that is known as life assurance fund, or you may call it as life insurance fund. What books are to be maintained? See what books are to be maintained by insurance company. One is revenue account, P&L account and balance sheet. That means all your financial statements. Next is you should also make one valuation balance sheet in which profit or losses will be reflected of life insurance businesses. It happens only in case of life insurance. Okay. This valuation balance sheet will be made only in the case of life insurance companies. Income from interest or rent, to be shown in revenue account. You need to separately show it. Okay, because you will come to know what all extra incomes a company is gaining. Expenses or incomes not related to a particular insurance business should be shown in P&L account. So suppose if you have some NOI, NOE, that is non-operating income, non-operating expenses that are not directly related to the insurance business. So you should show them in the P&L account. Students, am I audible?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Thank you. Next, assets of insurance company should be invested in following manner. Suppose you have many assets. So how should you be investing? 25% in government securities, not less than 25% in approved or government securities, and balance in approved investments. Okay. Just leave this valuation balance sheet. You are not supposed to do it in detail. You should only know this much. Valuation balance sheet, a separate account has to be made in life insurance companies, wherein you will calculate the particular profit that has been earned by life insurance business. So that can be calculated through or with the help of valuation balance sheet. Okay. It cannot be, just a minute. No, everything is covered. So we may leave this point now. Now, final accounts of life insurance companies. So when we now come to that FRA, we have practically done this final accounts of life insurance companies. Do you remember? Schedule number 1, premium. Then schedule
Yes,
number 2. What was schedule number 2? Commission. 3. 2 2 was, I think, claims. Then 3 was commission. And 4 was operating expenses. Remember? Remember or not? Yes. So that was final accounts of life insurance company, wherein it is stated that you have to follow all the accounting principles stated under Companies Act 2013. Okay. You need to disclose all the material facts, contingent liabilities, whatever assumptions you take, any outstandings, amortizations, claims that are to be settled or already settled, operating expenses, managerial remuneration, how do you do revaluation of the properties, historical cost, etc. So all these you have to disclose. That is what is given here, disclosure. Next, general instructions are also given that you need to prepare and show all the items in balance sheet, P&L and revenue account, respectively. Figures in financial statements may be rounded off to the nearest thousands. That means, suppose it is 39,499.99. So you can write down 39,500. So that is what he's trying to tell you in second point. Okay. Next is, if any amount of interest, dividend or rental receivable in connection with investment, then tax should be deducted at source. Otherwise, you cannot show them into books. Expression provision should be made of any amount that you need to, show that it is going to be a future liability. So you need to show provision word. For example, tax. You are supposed to pay tax to the government after 3 months. So now in the books of in the records, you will show provision for taxes. So provision word should be used. Students, are you getting my point?
Yes, ma'am.
Any expenses or any liability that may arise in future. So for that particular liability or expenses, you need to use the word provision. Okay, next, company should make all the provision for damages under lawsuits where management is of the opinion that award may go against the insurer. Suppose if a customer has done, has sued you and a court case is running. So if manager thinks that we are going to, the favor is not going to be, the case will not be in our favor. So we are going to lose the case. And suppose if the management is of that opinion that we are going to lose the case, then company will have to show in the records that there may be damage to the company. There may be some losses to the company because of this court case that is running. Lawsuits means court cases. Okay, some legal because of some legal matters, you are supposed to pay some penalties and some court cases are going on. So because of that, some damages will happen. Okay. Risk assumed in the excess of statutory provision should be separately disclosed. So suppose if you have made any statutory provisions, but then there is risk that is over and above the statutory provision. So you should disclose it separately. Any debit balance of the P&L should also be shown as deduction from uncommitted reserves. Debit balance of P&L means losses. That means he's trying to tell you that profit and loss of the debit balance, that means losses, should also be deducted from uncommitted reserves. You need not show the loss. You should adjust it with some uncommitted reserves, like general reserve, uncommitted, general. Okay. So Anu is asking what is historical cost. Historical cost means, suppose if you buy furniture, computers, fixed assets for companies. So those investments becomes historical cost, no? वो खर्चा आपके लिए historical cost हो गया ना? So अभी उसको वैल्यू कैसे करेंगे? अगर उसकी वैल्यूएशन निकालनी हो तो मार्केट में उसकी फेयर वैल्यू देखेंगे ना, मार्केट वैल्यू. Anu, did you get that?
Yes, ma'am.
Management report. What we are doing, students? What is the point? Final accounts of life insurance companies. We did accounting principles, disclosures, general instructions which are given to follow financial statements, and management report. So how will you make management report? Confirmation regarding continued validity of registration. Of course, you need it by IRDA. So this is one certificate which is given by IRDA, confirmation certificate. Next, the certifications that all dues to statutory authorities have been duly paid. That means whatever fees, whatever charges you need to pay, you have already paid them. Next, confirmations to effect that shareholders pattern, shareholding pattern, and any transfer of shares during the year are in accordance with statutory requirement. That means if you are suppose transferring the shares, or you have certain number of shareholdings in the company, so that particular rule and regulation should be according to the statutory requirement of the company. Okay, next, declaration that management has not directly or indirectly invested outside India the funds of shareholders or policyholders. That means without taking permission of IRDA and central government, you cannot invest funds outside India. Next, confirmation that required solvency margin have been maintained. That means you should provide solvency margins also. Certification to the effect of values of all the assets that have been received on the date of balance sheet. That means, as I told you, you have computers, fixed assets. So many fixed assets are there, plant and machine. You need to calculate their revised value based on the market value. Okay. And you note it down in the balance sheet also. Next, certification to the effect that no part of life insurance fund have been directly or indirectly applied in contravention of the provisions. Now, suppose you have collected premium from customers. So that amount of money you cannot invest in illegal activities. Contravention of the provisions means breaking the rules and laws. You cannot invest that money in illegal activities. Okay, contravention means breaking of the provisions of Insurance Acts, rules and regulations of Insurance Act. Okay, next, disclosure with regards to overall risk exposure and strategies adopted to mitigate the same. That means you should disclose that how much risk is involved in a particular project or policy. And how will you reduce the risk? Mitigate means reducing the risk. So what are the strategies that company will use to reduce the risk factor attached in that particular policy? Aging of the claims, including the trends in average claim settlement time during the preceding 5 years. That means those claims which are older than 5 years. You need to see what is the average amount that we need to settle at the time of the event. Okay, next, review of the assets quality, performance of investment in terms of portfolios, separately in terms of real estate, loans, investments, etc. You need to see what are the assets market value. How are my investment performing? How is my portfolio performing? So you need to show them separately in the books of accounts. Okay. How you prepare final accounts? If it is life insurance company, then 3 final accounts: ARA, APL, and ABS. And if it is going to be general insurance company, then BRA, BPL, and BBS. This is again same. This was final accounts of life insurance company. See, can you see this is final accounts of life insurance company, students? Yes, can you notice this?
Yes, ma'am.
So see, all the points are same in general insurance. Only name will change. Life ki jagah pe general. See, accounting principle. I will tell you. Wait. See, accounting principle, disclosure, everything is same again. See, this is general insurance, final accounts of general insurance business. See, all the points are same. All accounting principle, disclosure, then general instructions, then देख लिखा भी हुआ है देखो, in addition to general insurance business, in addition to general instructions relating to life, income from rent should not include any notional rent. बाकी सब same. Like whatever you have studied in life insurance, same will come here also, but except income from rent, which should not be included as notional rent. Okay, management report same, exactly same. Preparation of final accounts, BBS, BRA and BPL same. Okay. What is reserved for unexpired risk? See, premium is charged in advance for the risk which may happen in the future. So that premium which becomes income for the company is received in advance only. So company has to keep some amount of money from keep some amount of money from such premiums aside, and it should be in the form of reserves, because in future this money can be used for emergency funds or for paying settling the claims of of the persons who are facing the risk. Getting my point? So reserve for unexpired risk is nothing but keeping some amount of money reserved from the premiums that company charges from public. Okay, so some provision has to be made for that, and you have already done in practical questions. Remember, we were reserving for unexpired risk. For marine, it was 100% and 50% for another insurance companies. If it is marine insurance business, then 100% provision against unexpired risk is maintained. I will mark this sentence. See, the provision against unexpired risk should be 100% in case of marine insurance business. Okay, and 50% in case of other insurance business. 50% of what? Net premium. 100% of what? Net premium. Students, are you getting my point? The point that I have highlighted is very, very important. Is that clear,
Yes, ma'am.
students?
Yes, ma'am.
We have already done the practical questions also. Okay, what is premium? You know, you can pay them through debit cards, credit cards. You know, what is premium? A consideration charged for taking the risk of insured, because company is taking risk and therefore you will have to pay premium. What are claims? Claims are the major expenses for insurance company. That means if the loss occurred, then insured will ask for the claims and company will have to pay money to them. Okay, so that is known as claim. Students, is it clear?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Now, what is left in this chapter, I will tell you. See, applicability of accounting standards. Okay. Preparation of cash flow statement. This is just not very, important. Just leave this point. We may leave this point. Or I will tell you in very, very, simple way what has to be done. See, applicability of accounting standard means what? There are certain accounting standards that insurance companies will have to follow, like accounting standard 3, cash flow statement. So in FRA, have you done cash flow statement? In FRA, you remember you have done cash flow statement, operating activity, investing activity, and financing activity.
Yes, ma'am.
This is
Yes,
operating,
ma'am.
this is investing, and this is financing. So the insurance company will also have to follow the same procedure that we have done for corporate companies also. Okay, same, exactly same. Next, accounting standard 9, which is revenue recognition, which says until and unless the revenue is recognized, the income is recognized, you cannot show it in the profit and loss account. So once the income is recognized, you have to show it in the P&L account. That's what is stated here in accounting standard 9. Don't do that much in detail. Itna zyada detail mein nahi jana. Third, accounting standard 13, which is accounting for investments. That means when insurance company invest their money somewhere outside, like government securities, approved securities, infrastructure bonds, wherever you invest, you are insurance company, right? So wherever your company is investing, you need to show the record, proper record according to accounting standard 13. You need to show its investment value, current investment, long-term investment separately, investment properties, what is fair value, that means market value. You need to show each and every kind of detail according to accounting standard 13. Okay. Don't do that much in detail, just the way I'm telling you. Okay, next, fourth one, accounting standard 17, segment reporting. Now let me tell you what is segment. Now suppose if you have insurance company head office in Delhi, but you have different segments and branches. So each branch, each geographical area, suppose you have different branches in different geographical areas. So every branch or every segment will have to report separately. Will have to make separate financial statements according to accounting standard 17. That's what is written here. Because with the help of that, you will be able to understand, what is the performance of each of the branch, each segment, what are the risk and returns that enterprise has been taking. You will be able to understand them easily. So again, I repeat, don't do that much in detail. Okay, so done. How many accounting standards we did? Accounting standard 3, cash flow statement. Accounting standard 9, revenue recognition. Accounting standard 13, investment accounting. And accounting standard 17, segment reporting. Students, did you get how many accounting standards insurance companies have to follow?
Yes, ma'am.
4.
Yes, 4 accounting standards. Okay. Don't do this much in detail. Okay. Now,
Yes.
audit of accounts is very, very, very important. And this is a very big concept that I need to do. So we will begin in the next lecture. For this, I will at least require 2 lectures together. Okay, students. So these
Yes.
Ma'am.
internal control audit, general audit procedure. Okay. Then we have audit of major items in financial statements. Okay. So see, these are the points wherein we are, how an auditor does an audit. These are all the points of same topic. Audit of final accounts of insurance companies. Then audit report. It is also very important. Then my chapter is over. So 3 more concepts are there, and then we will be done with the chapter. Okay, students?
Yes, ma'am.
Okay, so I think we shall wind up for the day, and you please keep revising, keep reading the chapters, whatever we are doing, and see if you have any doubt, we can cover it in next lecture. I mean, we can clear it out.
Yes.
Yes, ma'am.
Okay?
Yes. Bye, ma'am.
Okay. Bye. Bye. Yeah. Bye, everyone.